All right, welcome to Assets and Algorithms, the show where we explore the intersection of real estate and technology. Today, I have my guest with me, Brian Kerr from Snowball Development. Thank you for joining me today, Brian.
Yeah, great to be on. Thanks for having me.
Absolutely. I'm really excited for this conversation to dive into some of the things we're seeing on the development side in the real estate industry as far as technology and all of the amazing things you have going on in your business at Snowball. So I'd like to dive right in and ask you, so you've been able to build Snowball developments around the idea of revitalizing underutilized commercial and industrial properties. Can you share more about your role and how it supports that mission of transformation and value creation?
Yeah, so in a past lifetime, I was an investment sales broker. And because I sat in that role, I was able to advise owners of property how to sell their property to those who hopefully had a forward-looking vision for what those properties could be. And I got to see a number of those case studies in action because if deals didn't go poorly, I probably got the repeat business of the second owner wanting to sell and crystallize on that vision. But I also got to see how much money they made and also how much the property improved. And to me, that was super interesting to watch and learn for those 15 years in brokerage, a series of business plans that entrepreneurial or institutional owners would take. And it was really interesting to kind of watch the players, but also watch the varying business plans and what worked and what didn't work, what was on cycle, what happened to work against the cycle. And so in my mind, it was like, being a football player and, just being given another series of playbooks and playbooks and playbooks and playbooks. And eventually you end up with your own kind of mega playbook of what can work and what can't. When I relocated to New York City from Montreal, a lot of the things that I'd seen in Montreal actually weren't happening that frequently down in the United States. I would actually say that the brokerage market in Canada, because it's less transactional, means that the best brokers float to the top and they get most of the business. Whereas the US is a lot more fractured. There are definitely way more people that are hustling and cold calling and may not necessarily have the skill set of a very savvy broker, but they have a hustle mentality, and that hustle mentality gets it pretty far in the US. But what it meant to me was that there was a lot of misbrokered opportunities. People who were good at getting a meeting, good at getting a listing, but didn't necessarily have the playbook that I learned to get because of who I was dealing with up in Canada. Between the time of going from being in Montreal and starting Snowball, I worked for the New York City Economic Development Corporation. I also did a master's in real estate development at Columbia University, focused heavily on urban development and transit-oriented development strategies, public-private partnerships. And in my view, really tried to learn a part of urban development that is all about finding the right catalyst for creating a better urban landscape from an equity standpoint, from a physical improvement standpoint, in some cases from an affordability standpoint, and understanding how I could take all those learnings that I had from brokerage, but also economic development, and apply it to a commercial real estate investment strategy. And so Snowball, to me, is about finding properties that require a change of ownership. The previous ownership was incapable financially or just wasn't their philosophy to invest in the real estate and improve it. They were, in many cases, intergenerational owners who were addicted to the cash flow, but didn't want to, replace the roof, replace the parking, upgrade the tenancy, do any number of asset management strategies that can increase value because they were frankly just happy with the cash flow that it was spitting off. And so our perspective is that we want to improve. And we want to improve the cash flow, but we want to improve the physical real estate. And by doing both, we think we're ultimately improving the community. And so that's kind of how Snowball came together.
Listen, I love that. I think that's very important, especially today, to really build those communities up. A lot of communities are going through redevelopment, and developers like yourself are definitely highly valuable, and that your focus is on not only the asset and making sure that it's performing, but also the community and making sure that it's better. than when you first got there. I think also what's great is that your portfolio spans across multiple states, right? Multiple property types, from warehousing to manufacturing. I'd love to hear what a typical day looks like for you as the founder navigating growth and that hands-on execution.
It's probably week by week, and last week was frenetic because we had a closing on Tuesday. And so there was the closing part of the beginning of the week of making sure all the money was ready to go. And then also the post-closing kind of wrap up of administrative tasks related to it, bank account setup, et cetera. So last week was very different. This week feels like, it's like it's like the after party, you're chilling this week. Uh, and so this week has been, catching up with leasing brokers, catching up with lenders, catching up with partners, catching up with, we're hiring right now. So, getting ourselves organized for the hiring process. I was putting together our model test that we were going to run our, potential candidates through, and, thinking through, I don't know, we actually produced asset management reports, all of our Q1 asset management reports. They're dated March 31st, but by the time you get all the information in from your property management teams, you get leasing reports in from the different brokerage shops, you package it all together, everyone signs off on it. It's May 7th or May 8th or May 9th, so this was a much more administrative week. But just today, yeah, I got cold called by a sales broker from Marcus and Millichap. So I spent 20 minutes on the phone with him talking about what we're looking for, what we want to buy, what we don't want to buy, how do we want to buy, all those things. I had a 30-minute conversation with a lender. I had a 20-minute conversation with one of my longstanding partners. So we have to be in touch. And I'd say that we're not a high frequency call shop. Like, we're not calling owners to find properties, but we're always touch pointing with all of the different intermediaries across our business. And to me, it's about trying to stay in touch with what's happening in the capital markets, what's happening in the leasing markets, what's happening with our partners' business. Are they going to be there on the next investment round? What's making them happy? What's making them not happy? Sometimes we got good news to announce, like distributions are going out. Other times, it's hey, it's going to take a little while before this property, is finally where it needs to be. And so, we're always communicating. And so that's my typical day. Communicate a lot.
I love it, man. Sounds like you really stay on top of it and make sure that all of those stakeholders are happy. And if they're not, how, you figure out a way to make them happy. I think with doing things like that, you really get to understand what's happening in the market, like you mentioned, but also you understand what may be happening in the future as far as major shifts that you may be seeing or others may be seeing in the industrial and commercial real estate space. Right now there's a lot of changing with logistics and remote work. I want you to talk to me a little bit about, you know, the trends that you're seeing in the market.
So in the industrial space, and I was tracking industrial properties for over 20 years as a broker first, and then and the Economic Development Corporation, we had to do some acquisition work in and around some of our properties on the Brooklyn waterfront. And so, was staying in touch with the Brooklyn, New York City industrial market. And now we mostly focus outside of New York City. We let New York City be the generator of demand because there's supply erosion happening in the industrial business parks of New York City because, a single story 30,000 square foot building on an acre of land in Brooklyn can accommodate 600 housing units. Highest and best use is going to be the 600 housing units. And it's interesting because in New York City, you have all of these industrial business zones, IBZs, sprinkled throughout the outer boroughs. There's this idea that jobs have to happen. And at the same time, there's a housing crisis. And you're like, okay, well, which crisis are we going to try and solve for? That the 30 jobs or the 700 people that want to, work in Midtown Manhattan and don't want a terrible commute? I don't know. It's like there's no easy answer. That's why it's so complicated to run New York City. Big cities have big city problems.
Right.
When we think about e-commerce and how it's changed fundamentally the industrial real estate world, it used to be that industrial tenants would move further away from the city to save money on their rent so they could grow in bigger buildings on fresh land. That was the trend that I saw for the first 15 to 16 years in the business. E-commerce changed that in that now industrial tenants that are high throughput That means a lot of goods are moving in and out of their warehouse facilities. They need to be closer to the rooftops. They need to be closer to, so industrial is effectively retail. Retail, we used to do market studies on demographics around the trade area of the shopping center. Industrial tenants are now doing the same thing because they're saying, how do I get access and cut the logistics timeframes down and the costs down to get to the highest number and quality of rooftops? Because these are the people who are going to ultimately receive the goods. So that has flipped the switch. And so what happens is you had all of these urban infill industrial assets that were built in the 50s, 60s, and 70s, the original suburbs that, were tossed away and cast away as inefficient, non-functional, maybe because there's an environmental problem. But now all of a sudden that land, because it's at a great intersection, it's right off of a highway, that land is now significantly more valuable to a high throughput industrial user. And so we're seeing that bidding up of land and industrial zone land because it's so difficult to rezone land for industrial that if you already have industrial zoned land, you're at such a starting place in terms of getting community acceptance to have, a high throughput facility. No one likes the trucks, but everyone likes the one-day delivery, right? So it's like, that's the problem. It's just you don't want those trucks steaming through a school zone. You don't want those trucks steaming by a hospital, but that's a complicated urban fabric that we have. And ultimately, people are a little bit tolerant because at the end of the day, everyone's a consumer and they want to consume things faster and cheaper than what they had before.
Absolutely. I think those complexities are definitely nuanced, and I love the way you described it and really talked about how they all fit together, right? And building that community the communities that we all live in. I think also what you touched on briefly was a little bit about how you guys are using technology. So I want to pivot the conversation to that. I noticed that you guys have taken on some bold redevelopment projects. Talk to me about how technology, whether it be AI data tools or platforms like Procore and Buildium, how have they impacted the way you scale and manage projects?
So there's a couple different ways that you can approach it, and I'll just touch on the challenge of technology and real estate for a second.
Okay.
Projects that we do, and what a lot of people do, are individually capitalized. And so although you might want to have technology tools at the platform level that allows Snowball to scale better, the reality, though, is that if you try to pass those costs down to the properties, individual properties may not benefit as much from those platform tools as others. And so fairness of allocating cost across a portfolio is tricky. And for that reason, technology has not really been at the forefront of a real estate owner's mindset. It's just, is the juice worth the squeeze? I call it, is this high return on low brain damage, or is it low return on high brain damage? And I like to stick to the former and away from the latter for our projects. So,
understandable.
Things that we do, we try to not do wholesale redevelopment or ground up development because the amount of dollars that come from a development at the end, considering the risk, and you are devaluing your property until you get a temporary certificate of occupancy, a TCO in real estate jargon speak. Your property is devalued until you get that magical TCO, at which point you've got revenue coming in, you've got a tenant, now you're like really valued. But up to that point, you're walking the high wire irons and you have no idea what's going to happen macroeconomically that could throw you offside. That was none of your fault. You just got caught wrong. So technology is tricky. Typically, real estate developers and owners are trying to keep their costs down because they're just trying to figure out a way to bootstrap their whole operations together. We take a slightly different approach. I believe in technology in terms of being more efficient. I believe I can bootstrap my company better by having more technological tools and frankly, less people. And so maybe this sounds a little bit jerky, but the reality is this, is that my technology platform doesn't take any sick days. It doesn't go on holiday. Its mom doesn't get sick. It shows up every day and does what I ask it to do. And it doesn't make human errors. The only human errors happen are when I input the information wrong into the system. So we use technology specifically for our investor relations when we're capital raising as well as reporting. And I mean, I basically don't need an administrative assistant. People call me all the time. Why don't you staff up? It's like, so I can have one extra person beside me every day. I need to buy another computer. I need to give them things to do.
Right.
Like what do I really need? And then we use, one thing that I find is super important is communication. And so when you have diverse teams working on a project, you might have a mortgage brokerage group, you have a legal group, you have a banking group, you have a tenant broker group. How do you share information seamlessly amongst all these different groups that maybe you don't want them seeing everything? Maybe you only want them to see a certain portion of what you're sharing. So we use a document sharing platform called ProDeal. That allows us to have a checklist, our own internal checklist, and have files and folders and really separate out who gets to see what, who's got different privileges. And for me, it's about trying, like, the last thing I want to do is have 15 people on an email chain. Like if you saw how deals closed with title, you'd blow your mind. It's just like the most arcane way of doing it. And you can't change lawyers' mentalities. They think it's the only way. Right. Just add more people to a chain. So I think, we use stuff like that to work forward. And, interactions with community. So there's community forum technology platforms where you can engage with stakeholders. You can get your message out forcefully about what your true ambition for the property is. You can poll people to be able to have that community stakeholder engagement. So there's lots of different things that are out there right now that we like to use so that, we're successful. And we want to do more projects faster, cheaper. And, and you don't want to have time kill your deals. So all those reasons are for why I think technology tools that are now available are catapulting our business forward faster than if we tried to do things handwritten notes and
Right.
old school.
Yeah, I think that's a great point, right? I think you talked about building a leaner team, right? Rather than bringing in more people that you have to train, you have this technology that makes you more efficient and more productive and makes the team that you already have more efficient and more productive and able to do more things. And I think that's a great point. I think
allows us to be remote and allows us to be remote at time too. The reality is this: I didn't do this because I wanted to sit in a desk every day, all day. I got family in Vancouver. I've got family and friends in Montreal. I've got family and friends in Europe. I like to ski. I like to be in a lot of different places. So I do the technology as well so that I can be all seeing, all doing as the founder of the company who, is 45 and likes to be a dad too, and doesn't want to be, feel like I have to stay at a desk from 8 a.m. to 7 p.m. every day to be able to do all the work. If I can do work faster, that means I get more playtime for all the other things I want to do.
Perfect response. So it sounds like technology is working really great for you. A lot of the things traditionally you're doing is working really great. I love to dive into some of the things that you're paying attention to KPI wise to let you know you're on track to continue that growth, as well as some of the challenges that you've come across. Talk about that a little bit.
So it's KPIs and portfolio surveillance were something that I totally ignored as we grew the company, for the first 10, 12 acquisitions. But it became pretty obvious to me that we weren't monitoring our track record, our successes in a way that was able to communicate effectively, but also to raise any red flags, about what we were possibly, getting ourselves into. So I did hire a friend of mine who I did my Columbia program with, who moved to San Diego post-program to work with his brother, but he longed to come back to New York. I was looking for someone, kind of who I felt could bring a different, unique perspective to the company. And so Andres Aldretti joined me 3 months ago as the head of portfolio management. And he's actively rolling in all of our separated spreadsheets and our separated property management reports and trying to pull it all in so that we have a much greater vision and view of what's happening at a portfolio level. So to me, this is a story that's in progress, and I'll happily report back in a few months where it's going. But I think it's actually really important for us to understand our risk, because as every deal is capitalized individually, so the risk is mitigated that if one property has a bad day, it will be contained. Problems can cascade in this business. And if you get offside and you default on a guarantee on one property, then you have to report it to all of your other lenders, or then you are offside with them in your own guarantees and communication. So number one, if you're going to have a problem, you need to know what it is. Two, you need to know if you can have a problem, how do you have to report it so that you don't end up misstepping with everybody else. We're now going through a tumultuous period with these tariffs. I have no idea at this point which of my tenants are going to suffer the most and are going to trip up. I'm assuming one of them will. And, is it going to be a marginal tenant that has a marginal business that pays a marginal rent in a market where they're paying half of market? Well, maybe if they trip up, it's actually a good news story for me. Or maybe it's going to be the tenant that I just renewed at a market rent, just refinanced, and took out equity and now have a higher loan. And now all of a sudden they're going to default. And now all of a sudden I can't make payments on my loan. I couldn't tell you which one it's going to be. All I can tell you is that I am mindful now that we're in a much more tumultuous period, that, you need to be mindful of where your leverage is at. You need to be mindful of the cash reserves you need to have, because you don't know. You don't know what's going to trip you up. Not that we weren't mindful going into this. I'm a Canadian. We are naturally more conservative when it comes to financing and leverage. Let's just say our banking system has never failed. The six banks that are chartered are going to be the six banks who are chartered 100 years from now. And I can't say the same about the US banking system, but you have to have that mindset of stability and of preservation. And I didn't get into this business so that we could be Icarus. I got into this business because I wanted to build something that had a duration and would last. Maybe not to be an intergenerational type of thing, but certainly to be a platform that attracts people, knowing that we are onto the right form of urban development. And we can make it happen over time as we build up our capabilities, we build up our balance sheet, and the natural compounding of investment works its way for us.
I love that. I love that answer. I think you put that really well, especially how you frame the macro environment in the real estate industry now. And also, you included some great insights and some great advice. Last question before I let you go. Looking ahead 6 to 12 months, where do you want Snowball to be from a growth, team, or capital perspective? I know we just spoke about some of the things going on and some of the uncertainties, but in a ideal situation, what would that 6 to 12 months look like?
6 to 12 months is pretty near term in real estate world, right? I always say that you overestimate what you can do in a year and you underestimate what you can do in 10. So 6 to 12 is a relatively short-term duration. In this relatively tricky capital markets environment, my ambitions are relatively low right now in terms of how much growth we can really achieve. What I would like to achieve is a series of internal improvements to the group. I like to have our team be a group of 4 that is lean and mean and efficient and collaborative and understands where there's crossover of team capabilities and skills and responsibilities, but also the demarcation lines for whose neck gets squeezed for what, right? So you kind of want to have interchangeability, but also clear responsibility. And to me, that's kind of like, that's the type of group we want to have. I'd also like to bring in someone more financial oriented to make my tax season next year be less of a bore. It's become unbearable for me to take on that full responsibility year after year, particularly as the company has grown and some of our partners come in that are more sophisticated. So maybe we're at 12 months from now because we hired someone before tax season started, and that would make me very happy. So that's probably where we're at on a personnel level. In terms of an assets, we have about just under 2 million square feet and 14 properties today. We'll probably be over 2 million square feet maybe 15, 16, 17 properties 12 months from now. I don't think it's going to be about the quantity. I think it's going to be about the quality of the deals and the partnerships that we bring in. And there's enough internal work, leasing, execution of business plans. We're working on a pretty significant lease for a property in Totowa, New Jersey, that I think will be our most intensive construction project to date. We are starting a relatively intensive construction project in just north of Hartford right now. So I think we're going to learn a lot about ourselves and our capabilities and what we're good at, and particularly what we're not good at. And that's the best learning, figuring out what you suck at and realize whether it's something you can improve or you need to bring in parts to improve you, because it's not what you're good at. And I think constantly reflecting on that point of what should I be doing day to day that puts the team and the company in the best position versus what do I need to let go of and bring in the right resources and pay up for to make sure that we don't make any mistakes, on a project level, but also on a corporate level. So those are the things that I'm thinking about for the next 6 to 12 months. We're always going to be moving forward. My family motto is "Avance sans peur" in French, which is forward without fear. And that's how I operate. We're always going to be active because I can't time the market. I couldn't tell you which year is going to be a good vintage year for buying real estate. You'll know in hindsight, but you might as well take your bets on good assets at good pricing at all times. And you'll figure it out afterwards.
Perfect answer, man. Lean, mean, focused on quality and moving forward without fear. I love it. I'd like to give you this time to let people know where they can find you, if they want to reach out, if they want to have a conversation, if they are interested in any of the projects that you have, where can they reach you?
Great. Thanks, Derek. Appreciate that. So LinkedIn, Twitter, Snowball-Dev is our feed. You can always go to our website, www.snowball-dev.com. You can sign up to be an investor if you're an accredited investor and look at our opportunities from that standpoint. If you've got deals to show us, find me. I'm easy to find. No different than Dion. I'm easy to find. So that's my perspective. We're collaborative. We want people to work with. I feel like we're in the friend making business. So we just want to make a lot of friends. And by being transactional, we'll make more friends. And so, yeah, I'm easy to find and online and by email, bker@snowball-.
Perfect. Thank you for sharing that. And I agree, right? I like to say that when you close deals, you open relationships. So absolutely. Thank you for joining me, Brian. And this has been another episode of Assets and Algorithms.